Okay, welcome back everyone. In this session, I'm going to be sharing very exclusive content that you are not going to find anywhere on the internet and anywhere else on YouTube except this channel. These charts were personally created by myself during my time working at a hedge fund here in New York City. I still use them to this day for my personal trading, and they provide some unique insights into the market that I'm hoping will help each of you out. So, for those of you who use TradeStation, you guys know that TradeStation allows us to select the display location for up to 16 subgraphs on a single chart. That's great. Now, combining different sessions that are charted in different colors and or styles into a single subgraph, that allows you to create a unique view that highlights differences between intraday and overnight behavior. Now, in this chart right here, intraday closing prices are displayed in purple, as you see right here, okay, using 10-minute spacing, and the long overnight time frame in green, right here, these green dots, okay, is compressed using 30-minute spacing. Now, the effects of compressing the long 17.5 hours when the U.S. markets are closed, but expands the display for prices during the U.S. Session right here. Now, using this approach, you can compress or expand any selected time frame defined in a custom session and align the results with any other time frame. Some food for thought. Now, you could, for example, create a custom session with the first and last hour of the U.S. trading day and expand the detail for these 2 hours with 30-second bars, and then chart the result alongside a compressed version of the long overnight session using 30-minute spacing. Now, the two colors here are actually different charts created with different session templates as a single subgraph. Now, this is a simple way to spot market instability. That's to overlap the overnight and intraday price changes. And I thought that I would share this as it could be useful in the further development of your strategy. Now, as an additional example, let me bring this over here. Right here. All right. These intraday blow-off tops right here, and here that you see, these are very common just ahead of a sharp decline, especially when the market touches a key level like 2000 on this chart. Now, guys, this is an old chart from my archives, but it does a good job illustrating my point. This is the S&P 500. Back when I took the snapshot on 9/17, this 9/17 top right here was immediately preceded by a sharp drawdown that took about 100 points off the S&P. Boom, right there over a period of 5 days. Now, the next two time frames right here and right here, okay, contained additional sharp tops followed by immediate sharp sell-offs as well, as you can see right here. Boom. Right? Now, these charts represent a combination of short covering by human investors and program trading systems seeking new long entry points. But it's an excellent visual aid to have while you trade. This sort of high-low transition, guys, it's an important intraday chart feature created when program trading systems attempt to score off positions to prepare for a large move in the market. Okay. I hope you guys found this helpful, and if you did, please consider giving it a like and subscribe for more unique content to optimize your trading.